Looking back at 2023, at a macro level, I'm interested in your opinion of how the commercial industrial market has performed over the past year.
It's been an interesting year. I think, coming into the year in January, it'd been widely documented that we were sitting on 17 or 18 straight quarters of negative or positive absorption and had negative availability. Our rental rates were rising at between 5 and 15% quarter over quarter. So the big change in 23, or the start of the change in 23, is kind of seeing the market cool off a little bit. We've definitely seen the escalations on the rental rates decrease. They haven't gone down, but they've certainly decreased in terms of exponential year quarter over quarter increase. We've seen buildings sit on markets for significantly longer than we have in the past. So these are all signs that the market's starting to change. And we really saw it, kind of hit ahead towards Q3, Q4, and it'll be interesting to see what the Q4 statistics looks like. But it certainly feels like the top's come off the market. It certainly feels like landlord expectations of 3 and 4% escalations year over year on the back ends of deals are starting to calm down. Expectation of client participation in build-outs of being 100% are starting to go away. So we're seeing landlord participation in build-outs. We're seeing free rent come back. All the signs that say we're starting to get more towards an equilibrium market and away from that entirely landlord-centric market. And, given interest rate increases over the course of the year, given that we've seen land sales slow down, given that anybody that didn't have a shovel in the ground has kind of put off any kind of construction, it looks like we've definitely hit kind of the top of that market. It feels like we've definitely hit the top of that market and are starting on, if it's not a recorrection, then definitely a balancing of kind of call it the next 6 to 12 months.